Hello, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us on this smoky Monday here in the Pacific Northwest. Today we thought we'd talk a little bit about earnings season. Earnings season is mostly over for the second quarter, so Josh can talk about that. And then I'll talk a little bit about how our portfolios are positioned here going forward, especially if we see more inflation or continued inflation. And then what we think will probably look like for the markets in the second part of this year and into next year. So Josh, why don't you give us a wrap-up of second quarter earnings?
Almost all the way through second quarter earnings season, 460 companies of the 500 companies in the S&P 500 have reported earnings growth year on year, tracking at near 90%. Remember, that's coming off the comps of the coronavirus pandemic. Revenue growth, almost at 25% year on year. But more importantly, when you look back to the second quarter of 2019, S&P 500 earnings are up about 30% over that quarter, and revenue growth's coming in somewhere around 8.5%. So definitely a significant trend to the upside in earnings over the last couple of years. And valuations, as with such good earnings growth, valuations at multiple expansion isn't what we had previously seen in the months starting 2021.
Meaning stocks aren't quite as expensive because earnings have grown as we thought they might be. So let's talk about our portfolios. We feel like we are really nicely positioned here on a go-forward basis, especially if the inflation numbers continue to move in the direction they have been, which is higher. If you go back and look at inflationary periods in the United States, what asset classes did the best on a relative basis, and that was certainly smaller and medium-sized companies. And all of you that are our clients have a very healthy exposure to small and mid-cap stocks. The other thing I'd say about that is if inflation is in fact transitory, like the Federal Reserve says it is, I don't think it's going to be, but let's say that they are right and we don't have inflation continue to move higher, we still believe that small and mid-cap stocks are going to do well. So it's sort of a win-win situation. So we really believe like our portfolios are positioned if we do see inflation. We also own assets that on a relative basis look attractive relative to, say, U.S. large cap stocks, which have had such a good period over the last 10 years. So don't be surprised if at some point here in the next 4 or 5 months that we do a portfolio rebalancing. It's just a risk management tool that we employ to make sure that our portfolios from a risk perspective are where they're supposed to be. And then remember, this is just for you to mentally prepare yourself that seasonally, the fall is usually historically a very volatile period, and we don't think that's going to change this fall. If you go back in time and you remember where we saw lots of volatility and the financial crisis was in September and October. Some of you that have been around a little longer remember October 1987 where we saw a big sell-off. So we think seasonally the fall is going to be more volatile than the first half of the year. And that doesn't mean we're going to do anything about it. We just want you to mentally prepare for some more volatility. Remember, volatility can be to the downside as well. So as always, if you have a question about your situation or your account, you can give our office a call and get on our calendar. That number is 800-743-0988. We'll see you back here in 2 weeks.